Today, we want to talk about some recent developments in the Indian economy that have caught the attention of economists and analysts. A couple of days ago, India's GDP numbers for the latest quarter were released, and this has created a lot of buzz. First off, the GDP figures have received a lot of praise from economists because they exceeded expectations. Now, despite concerns about high interest rates and global economic growth, the Indian economy managed to grow by 6.1% year over year in the fourth quarter of the fiscal year 2023. Now, this is an improvement compared to the 4.5% growth seen in the previous quarter. One of the critical drivers of this GDP growth was the pickup in manufacturing activity. After experiencing contraction in the previous two quarters, the manufacturing sector grew by 4.5% in quarter four. Now, this is a relief because the sector has been facing challenges due to slow external demand and an uneven domestic demand recovery. Now, to further understand the strength of the manufacturing rebound, let's take a look at the Manufacturing Purchasing Manager Index, which is the PMI. Now, PMI is a leading or a forward-looking indicator that provides insights into the operating conditions of the manufacturing sector. Now, it is based on a survey of purchasing managers who rate various factors such as employment, production, new orders, prices, and inventories. In May 2023, India's manufacturing PMI came in at an impressive 58.7, following a strong reading of 57.2 in April. Now, any reading above 50 indicates expansion in activity, while below 50 signifies contraction. Now, what's noteworthy is that India's manufacturing PMI is significantly higher than that of most other economies in Asia. The May PMI reading also surprised positively on several fronts. Factory orders experienced the fastest growth since January 2021, business confidence levels reached a 5-month high, and companies recorded the quickest expansion in international sales in 6 months. Now, these factors indicate that the Indian manufacturers are confident in their ability to increase production from current levels. Now, despite the challenging global outlook and uncertainty, the sustained improvement in overall operating conditions for this 22nd consecutive month demonstrates the resilience of the Indian manufacturing sector. However, it is important to remain cautious about macroeconomic headwinds as global uncertainty may impact funding for new investments, particularly in the manufacturing sector. Moving on, let's talk about another indicator of the Indian economy's strength, GST collections. Now, gross goods and services tax collections in May witnessed a 12% rise compared to the previous year, reaching rupees 1.57 trillion. This is the fifth time since the implementation of the indirect tax regime that GST collections have crossed the rupees 1.5 trillion mark. Now, the increase in collections can be attributed to recent upswing in industrial and business activity, along with a high inflation playing a supporting role. Now, shifting gears a bit, I also want to highlight a significant achievement in the Indian digital economy, the remarkable growth of UPI transactions. UPI, or the Unified Payments Interface, has revolutionized the way we exchange money in India today. Now, with its lightning-fast transaction and user-friendly interface, UPI has also gained international acclaim since its introduction 6 years ago. In May, UPI transactions reached a record high of 14.89 trillion lakh crore, surpassing the milestone of 900 crore transactions per month. Now, this trend is expected to continue, with the PwC India report projecting that UPI transactions will reach 1 billion per day by 2026 to 2027, accounting for 90% of the retail digital payments in the country. So there you have it, the latest updates on the Indian economy. Now, this week saw the release of a plethora of economic data, and it was all mostly good news. Now, GDP numbers were better than expected, GST collections remain strong, PMI numbers are also on an upward trajectory. Now, in the midst of all of this global turmoil, we do believe India is in a relatively sweet spot. Having said that, we remain wary of macroeconomic headwinds that could impact the Indian economy. While I say this is me, Merle Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com